Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. Tax havens and tax evasion, according to us, are two sides of the same coin worldwide. Tax havens help multinational corporations and high net worth individuals to shift their capital and profits from the domains and territories and nations where they were earned and where they should have paid tax thereon to tax havens where payment of tax is either avoided completely or significantly. These kind of territories or nations have included the likes of Switzerland, British Virgin Islands, Bahamas, Guernsey, Channel Islands, and the likes of Hong Kong and Netherlands. These tax havens give you the facility, give you the attraction of either pay zero tax or low tax or pay low tax at a very negotiated rate and thus ensure that your money, your income is parked in those nations. Because of this arrangement, because of the existence of tax havens, countries worldwide lose immense amount of legitimate tax which is due to them. While business is conducted in a certain country, the profit is shown in a tax haven, and the country where the business was conducted and profit was earned is denied its share of legitimate taxes. It is estimated that the loss of taxes to nations last year on account of these tax havens was to the tune of $427 billion in one single year. And it is estimated that the loss to India was to the tune of $10 billion, which is about 75,000 crores of rupees. The fact of the matter is that tax havens have originally been a creation of the West. And the thinking was that let there be tax havens. And by doing that, encourage the developing poor countries to indulge in tax evasion, to indulge in tax crimes, financial crimes, banking crimes, money laundering, corruption, etc. And all that loot, let it be sent to the tax havens to handle. So you had corruption in India in a big way. The money traditionally went to the likes of Switzerland, etc. And they managed the money. Of course, they benefited from the money in a big way. Resultantly, the wealth of poor nations was looted in a large manner year after year. And that could only happen because of the support and existence that was provided by tax havens. It is tax havens who encourage the poor nations and their leaders and their bureaucrats and their businessmen to indulge in tax evasion, corruption, and other financial crimes and launder the money in the tax haven territories. This is how the West actually started the tax havens. That was their primary purpose. The irony of the matter is that the chickens have come home to roost. And while the West created and benefited from tax havens, it is now the West that says that they are becoming victims of tax havens and that must stop. In the case of US, it is estimated that the US loses tax revenue to the tune of about $150 billion a year because of tax havens. And that about $1.5 trillion of wealth of the US corporates is stashed in tax havens. And the US today claims that it is the biggest victim of tax havens that are there worldwide. Despite all kinds of attempts, the US has failed to be able to stop this flight of profits and capital from its territory to tax havens. And as we said, it's about $150 billion a year. The total amount parked in tax havens being to the tune of $1.5 trillion. The fact of the matter is that by offering either a zero or a low or a negotiated tax rate, the tax havens have become extremely attractive investment destinations. We have seen the emergence of countries like Ireland only because of that. Very low tax rates and corporates choose to go there. A low tax rate is a big attraction. And because of this policy of tax havens, of zero, low or negotiated tax rates, many other nations have been forced to cut their own tax rates in order to remain attractive, in order to ensure that foreign capital comes to them also. In order to remain and become an attractive investment destinations, countries worldwide have been cutting their corporate tax rates in a significant manner. Countries need to remain competitive in order to attract foreign capital, and thus they have all been forced to prune their corporate tax rates. A report says that between 1985 to 2020, major economies have cut down their corporate tax rates from 49% to an attractive 21%. Even India had to do that. In September 2019, the finance minister announced that Indian domestic companies now have an option to be taxed at the rate of 22%. She also said that in case a company sets up a manufacturing business in India from then to 2023, then the tax rate would be a mere 15%. India had to do that because it competes for the same pie of foreign capital with the likes of Vietnam, Thailand, etc., where the tax rates are very competitive. And India had to do that in order to remain in competition, in order to remain in the fray, to attract foreign direct investment into India. Our finance minister very often nowadays cites the low tax regime of India as one of the biggest reasons why foreign direct investment has come into India in a large way in the past couple of years. The fact of the matter still is that taxation rates are an irritant and that the flight of capital continues to tax havens because of these tax rate variations. The biggest loser, the biggest victim because of this has been the US. As we said, it loses tax revenue to the tune of $150 billion a year because of tax havens. The US has failed. The US has been unable to prevent this flight of profits and capital from its territory to tax havens, and thus it now has come up with a new proposal. The United States proposes that there should be the levy of a minimum global tax worldwide by all nations. There should be a uniform rate of corporate tax worldwide. And if that is done, the very existence of tax havens will not be attractive anymore. It has proposed to the OECD that there should be a minimum tax of 21% levied on corporates on their global income. The way the proposal would work is that suppose a corporate pays tax at the rate of mere 6% in a particular country, and that corporate is an American corporate, then US would have the right to levy an additional tax of 15% on that income. And that itself would negate the very advantage that tax havens give to American corporates. It is not expected that the OECD will accept this proposal. No country is going to give up its competitive tax advantage rate that it has. After all, the OECD even consists of countries like Switzerland, which are not going to accept this US proposal. And that means the OECD, USA, and corporates are all going to be on a collision course. This was bound to happen. In order to pursue this alternate of a global minimum tax rate, the US has also been seeking the support of India. India at the moment has offered a tax rate of 15% for manufacturing entities. And in case it were to accept this, then those very entities would end up paying tax at the rate of 21%. India is not going to accept it. Since India itself has been a major victim of tax havens, and over the years, huge amounts of Indian profits and capital have gone to tax havens. Seeing that, the US is reported to have approached India to accept its proposal of a global minimum tax. Acceptance of this proposal, if at all it does, is not going to resolve this problem that India faces of flight of capital from India to tax havens. After all, unless every other nation does not accept this proposal, there will always be a flight of capital, flight of profits from one territory to the other. And thus, by India accepting any global minimum tax rate, it is not going to be benefiting at all. Further, the fact is that in case tax rates are made uniform worldwide, in that situation, countries are going to be able to attract foreign capital to their territory, not on the basis of tax rates, but on the basis of their infrastructure, their regulatory and compliance regime. Unless India's regulatory compliance regime and infrastructure does not become robust and easy, if there is a global minimum tax rate, then India will not be an attractive investment destination. Today, on account of its domestic market and on account of a concessional and low tax rate, India has been attracting FDI in a larger way. But the day that stops, the day India is not allowed to have a low tax regime, then India is not going to be able to compete with competing nations on account of its patchy and deficit infrastructure and uncertain and onerous tax and business and corporate laws. Thus, acceptance of this proposal makes no sense at all as far as India is concerned. If India wishes to do that, it must significantly ramp up its infrastructure. It must significantly simplify its regulatory and compliance regime. And in case it doesn't do that, then India's attractiveness and investment destination will certainly fail. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Hello everyone. HW News English is 2 years old now. When we started this venture, we promised ourselves one thing, that news should remain free, because right to know is the right of every Indian. But to keep news free for everyone, we need support from some of you. And thus we have rolled out membership on our YouTube channel HW News English. But mind you, the membership is completely voluntary. The programs that we were doing earlier, that we are doing now, will continue to remain free. First level is a basic level. Here, you can be our supporter by paying Rs 199 per month. This membership gives you certain perks and benefits. The perks include unique badges in front of your name, a live show from Mr. Sujit Nair and from Mr. Akhilesh Bhargava per month for our members. You can also vote in some exclusive members-only polls. Now the second level is Super Supporter. Here you can be our Super Supporter by paying Rs 3,999 per month. This membership will include every perk that comes with basic level. Additionally, our Super Supporters can be a part of a WhatsApp group where we can have discussions and suggestions on various topics. The second perk includes a gift pack with our merchandise. And the third perk is a Google Meet with Mr. Sujit Nair, where you can join the meet and ask your questions to Mr. Nair face to face. Lastly, if you like, we would give a shout out to our super supporters in our programs. So, hope to see you soon with our badges.